You have the material available with you for the Chapter 7 homework example. This is the last problem example. And in order to determine our various activities, what we're using is the Cash Receipts Journal. Notice the page number CR1. So the first thing we're doing is looking at our beginning balances. So on March 1st, the accounts receivable ledger of Bob Company showed a balance with Company A of $2,000 and Company B $3,000. So we're going to go ahead on the subsidiary ledger. For Company A, we are going to put in an explanation as balance, and we're going to have a balance of $2,000. For Company B, or B Company, we are going to have an explanation of balance again, and we have a balance of $3,000. So these are the subsidiary ledgers for accounts receivable. The control account, the general ledger for accounts receivable, is right here. And our March 1st balance, of course, is going to be the total of those two accounts. So our March 1st balance is $5,000. Okay, so let's proceed to go through our various transactions. The first thing we're doing is the owner, Bob, is investing $1,000 cash in the business. So on March 1st, the account we're going to credit is Bob Capital. The reference, if you look at the account number for that up on top, Bob Capital's reference is 301. And what we're going to have to do is we're going to have to go ahead and debit the cash for $1,000. We are then going to go ahead and credit other accounts because Bob Capital is going to be another account. Right? We don't have it listed up here. It's considered other accounts. All of these, of course, are zeros. Okay, let's go on. And I realize there's not as many transactions as you have in the last problem, but some of them were similar and I thought we could use less for an example. On the 3rd, we received a check for payment of account from B Company less a 2% cash discount. So they did take a 2% discount. So on the 3rd, the account we're crediting is B Company. The cash amount we're debiting is $2,970. Sales discount debited $30. And of course, we're going to credit accounts receivable for the total amount, $3,000. All of our other accounts are zero. So if we go into B Company and we look at B Company, we're going to go ahead on March 3rd. Our reference is CR1. That's the page number it's coming from. Of course, we're debiting 0. We're crediting the $3,000. There is no balance in that account. The way we figured out the discount is 3,000 times 1%, and that would have been the $30. Okay, the next transaction, we received a check for $1,800 and payment of invoice number 206 from A Company. So we're going to go ahead on the 4th. Account we're crediting is A Company. $1,800. We have no sales discount here. We, of course, are crediting accounts receivable $1,800. Nothing else is being touched. So we're going to go into the A Company subsidiary ledger. And we're going to go ahead, reference CR1, that's the page it's coming from. Of course, we're debiting 0. We are crediting $1,800. That's leaving a balance of $200. The next item is we received a cash refund from a supplier for damaged merchandise in the amount of $200. So this is going to be merchandise inventory. Reference is 120, so we're acting as if we're posting it, right? Reference is going to be 120. The cash debit is the $200 we received. And again, we're going to credit other accounts, right? The account number is 120. It's the merchandise inventory account. Okay? And our last transaction, we made a cash sale of merchandise totaling $3,000. The cost of the merchandise was $1,400. So, there's no specific account, right, that we're going to have to worry about crediting. It's not an individual person. Cash is being debited for $3,000. We are going to go ahead and credit revenues for $3,000. And now we're going to go ahead and debit cost of goods sold, merchandise, credit merchandise inventory for $1,400. Okay, we're going to go ahead and add up all our columns. So our cash total is $8,970. Our sales discount total is $30. Our account receivable credit total, $4,800. Sales credit, $3,000. Other account credit, $1,200. And cost of goods sold debit and merchandise inventory credit will be $1,400. The various account numbers are 101 for cash, 414 for sales discount, 112 for accounts receivable, 401 for sales credit, and X here. Because this is not going to a specific account, right? It's going to different accounts. So we're going to put an X there. This total is not going into a specific account. It's going into various accounts. And the last, where we're debiting cost of goods sold, crediting merchandise inventory. Cost of goods sold is 505. Merchandise inventory, I believe, is 120. Yes. So we've taken care of all this. Now we're going to look at our subsidiary ledgers and our general ledgers for accounts receivable. Accounts receivable, we can take this right off our credit for accounts receivable. We'll take it right off our cash receipts journal. Is $4,800. So let's go in March 31st. Our reference is CR1. We're debiting 0. Crediting $4,800 gives us a balance of $200. And I forgot our explanation at the beginning on March 1st would have just been balance for the initial accounts receivable beginning balance. It would have just said balance. So right now we see our accounts receivable general ledger has a balance of $200, right? If we look, if we want to prove our accounts real quick, we know accounts receivable has a balance of $200, and I believe you have to prove your accounts in the book. What you're going to do is just look at whichever accounts you still have that still have a balance. In our case, it's just a company. So our subsidiary ledger has an account balance of a company for $200. So the total for its subsidiary ledgers, it's the only account we have remaining with the balance, is $200, and that should be underlined also, double underlined. Okay, if you have any questions, I know all of this is kind of confusing because we had to put a lot of information in just a small amount of space. So if you do have any questions, feel free to contact me. If not, I'm hoping this gives you enough information. Have a good week.